When it comes to trading futures or stocks or options, you want to be the most proficient and the most sound engineer that you can possibly be at reading supply and demand, price action, as well as implementing your trading plan along with your strategy. Now, if you guys have been following me on this YouTube, or you guys are maybe members in the Discord, you guys already know that I'm dishing out a lot of easy to use strategies, not only for beginners, but for more experienced traders as well. And as we start to get confidence and as we start to build on our strategy, for example, the 20 SMA strategy playing over under those change in trends, we can then start to add in more key components that are going to help save not only your profits as well as your losses as well. Now, some of you guys have maybe seen my big boy chart here. That's the chart with all of the supply and demand zones on it. And some of you guys may be thinking that's way too many lines. How do you read the chart? You know, nobody can trade. I've heard everything under the sun, right? Nobody can trade with all that spaghetti on your chart. Look at that's all fine, right? Everyone has a different way of trading, but to me, I've been trading this chart this way for over 6 years now. It's very, very crystal clear, and it gives me not only a means to an out, but also where I should be taking profits at. How many times have you been in trades where you get into the trade, it seems to go a little bit and then snaps back, and then you don't understand really why you lost a trade? Well, there was probably a significant moving average or supply and demand zone in that vicinity or in that area that caused the stock to bounce, right? So some people are going to call them different things: imbalances, supply, demand, moving averages, a certain indicator, this, that, and the other. It really doesn't matter what you call it. At the end of the day, the stock is always right. The candlesticks are never wrong. So if we kind of look at the NQ today, there was realistically only a 20 SMA play that happened in the pre-market. Now, again, if we're not really trading the pre-market, that's going to be very, very hard to identify. And by the time that the market opens, we're going to feel like we kind of missed the whole bus, right? So again, let me kind of show you how the big boy chart, and again, if you guys are interested in learning the entire strategy, become a member at evolutiontraders.com. Become a lifetime member. I will outline in detail, whether it's one-on-one through a phone call, whether it's one-on-one through a Zoom meeting. It doesn't really matter how we go over it, but I can start to teach you how to understand this chart and how it can benefit you in the future. But again, if we just look at where we're at to the open, if I look at the opening candle here at 6:30 in the morning, you can see here that we start to dip below these overnight session lows here. And then at 6:35, we get a drastic red engulfing candle that kind of closes below everything. So you can see the green line is the 5 SMA, the 10, the 20, the 50, the 200. We're below all levels of supply. And if you see this channel level here, this is called a linear regression channel. I love using these because it gives me a good in and it gives me a good out or potential bounces. Now look at the candle at 6:35 a.m. as it takes out the linear regression here. That's your first close into a new channel. So the new channel being from a price of around 15,317 all the way down to around 15,221. So about a 100-point move into that next channel. Now, all essentially we would be waiting to see happen is when we start to break down below this channel level, we can start to jump short. Now, whether you want to jump short on the breakthrough or you're looking for a confirmation, it really doesn't matter, because at the end of the day, our hard stop loss is going to be a 1-bar stop. Or if we want to tighten up that risk, we can use the 5 or 10-day moving average. So how you're going to use the 5 and 10-day moving average is as it starts to trail those candlesticks and trail that price action, what you want to do is, if and when we do close back over, analyze your risk. How much are you down? Are you comfortable with giving it a little bit more room? If you're not, you're going to exit the trade. Or if you are, we're still going to use our 1-bar max pain stop. So as we confirm into this new channel level, we get a confirmation here, follow through here, follow through here. This is a 3-push candle move down. Now, I always tell newer traders, start taking profits 2 or 3 candles in your favor. It's going to be a lifesaver. You're going to be profitable, and you're going to gain the confidence to keep on taking these trades. Now, as we start to consolidate, we start to rise and get back over the 5-day moving average. And as soon as we test this 10-day moving average, it's a stiff rejection for the new low. We consolidate back into the 5-day moving average, and then we drop to the bottom of the channel. So essentially, if you were kind of trailing it with that 1-bar stop, or you're trailing it with the 5, 10, or 20-day moving average, depending on your risk tolerance, you could have essentially ridden this trade all the way down to the bottom of the channel, home run trade, and we did never need to catch the move in the pre-market session. We could have just came into the market when the market opened like a normal adult. We don't need to lose sleep over these stocks. There's going to be a new setup each and every single day. It's only our job to be on the right side of the move when it presents itself, and also execute on the move when it presents itself. So I want to show you something here that's happening right now in real time, why this chart is going to be so beneficial. If I kind of just rewind here, as we get down into this lower Bollinger Band and we start to consolidate sideways, as soon as we get the close back over the 20 SMA, it was 9:20 in the morning. Now this was the first close back over the 20 SMA going all the way back to the market open here. You could have set a 1-bar stop under the low wick. You could have gotten in on the entry candle at 9:25. You could have ridden this to the next supply zone, being the linear regression. You could have taken profits there, held the runner, seen if we broke that, and as soon as we did start to break that, take profits into the next major supply zone, which was the 50 SMA on a 5-minute time frame. Now again, you can see once we break this 50 SMA on a 5-minute time frame, that's your next level of supply. What's generally going to happen? We're going to put in a new high. We're going to back test. If the bulls are strong, that 50 SMA is going to go ahead and catapult that higher. So you can see here, we break it, we put in a new high, we kind of come up and touch a new high, and then what do? We back test this 50-day moving average before essentially riding our power trend 5 SMA all the way back higher. We back test again the 50 EMA, and then you can see we hold and then putting in a new high. Now each candlestick is going to test a new level of supply and then either confirm it or get rejected and come back down. As we confirm each level of supply, you can see we clearly touch each level of supply. So why is this chart so important, and why is it going to be beneficial if you understand and learn how to play these spaghetti lines on the chart? Is because it's going to make you more profitable. I'm not going to sit here and spit nonsense concepts or nonsense that's going to be so hard to understand where you're not going to be able to make money. This is all built so you are more successful. This system is built so you can be profitable. Again, if you want to learn more information, you want to get the access to the intraday lives in the chat room and the one-on-one coaching, evolutiontraders.com, become a lifetime member. Again, invest in yourself, invest in your education. And if you don't believe in yourself, you shouldn't be watching this video. And if you don't want to take the time to learn, you shouldn't be watching this video. So again, as we get rejected at this channel line that originally we broke down from in the morning, we start to roll over. Now I want you to look at something here. Some would say there's a 20 SMA play here that sets up at 12:05 Pacific Standard Time. However, I see something a little different. I see here, once we started to crack below this 20 SMA, we were looking at a 50 EMA here. Now look at the gap between the 50 EMA, which is this purple line here, all the way down to the Bollinger Band, and the 50 SMA. This is going to absolutely peel your wig back. What I want to show you guys is that if you are using a 1-bar stop in any one of these plays, this is where, it pays to be an executor. This is where it pays to be, someone who can dominate. This is where it pays to be an absolute gamer and trust your instincts and trust your chart reading, price action abilities. Because in this particular case here, if we break the 50 EMA, stocks are going to trade 9 times out of 10 from supply to supply and demand to demand. What does that mean? That means that if we break this level of demand, we are going to trade down into the next level of demand. That was the lower Bollinger Band. That price action, if you would have jumped short here, was 15,256. The Bollinger Band was sitting here at 15,235. So you can see here about a 20 to 25 point move in a matter of 5 minutes. Now, again, if we break below the Bollinger Band, what's the next area of demand? And you can see here clearly is the 50 EMA or 50 SMA. And again, if we break that, you want to take profits into the next area of demand. That's why this chart is so important. And the faster you guys start to learn how to read it, even though you only need a 20 SMA on your chart, even though you only need to kind of know a few things as far as supply and demand, if you get enough comfortability level with reading this chart in correlation with your 20 plays, in correlation with your high of day breaks, in correlation with your low of day breaks, this is going to absolutely make you a beast of a trader, and it's going to take all emotions out of the way. Again, I love that you guys are watching the video. Like, comment, subscribe. Again, join the Discord. That link is down in the description box below. I'll see all of you guys on the inside. And for those of you guys who are still on the fence, I'll catch you guys on YouTube later.